Shidim Shari. Indeed, green paradise yesterday for those that were speculating in Chinese stock. I was planning to do a pharma sector focus, pharma and biotech today. But given what happened with the Chinese stock market yesterday, I figure it's worth focusing on that. Instead, I will push the pharma biotech to tomorrow. China brought out the bazooka yesterday, and as of right now, it looked like it's gonna give back half of what it gave yesterday. The market will take, but if you're a student of TA, you would be wise to took some profit yesterday. This white line that you see had been drawn in for a long time. Okay, not yesterday. It was drawn on before. If you go back and look, search up my video on BIDU, you see it. Okay, it go back to last year. This white line. Okay, that was a key. Sure, there's another channel that is also important, but for now, that white line is the big resistance that BIDU popped up and stay. Now, can it retrace back to the gap fill? Absolutely. Absolutely, it can happen. Okay, yesterday that was a massive short squeeze. If it was something that's sustainable, then yeah, you can see it go to the 200. But yeah, it's a long way. Okay, the 200 is gonna line up with that gap fill that you see right here very shortly. So yeah, but as of today, as of right now, does not look like it. My best advice, if you're trading Chinese stock, is pay attention to TA. Don't just buy blindly. Okay, Baba. As I mentioned the last time I talked about Baba, that it did a lot better than BIDU. That's where I got wrong. You know, I was trading Baba for a while, and then I switched over to BIDU because I thought that was a better play. Wrong. But did Baba pop to some random level? Let's go back 3 years. Let's see. Not really. Well, let's go daily for 2 years. Okay, there is a reference high that it hit. Hard to see it when you do weekly, but if you do daily, you can see it. Okay, see right there. Right there. See that peak? That's almost like a mini head, shoulder, no, shoulder, head, shoulder, right? But right there, it's not a random spot. Okay, it's a spot that has some reference high before, and as of right now, it looked like it's gonna retrace back, and just like BIDU, not quite the gap fill, but can it go all the way back to the gap fill? Yeah, you know, it is what it is. Okay, I would talk more about what my thoughts on the overall Chinese market and economy at the end of this stream. But for now, I think all the stock behave very TA wise. So I trimmed 25% of my BIDU yesterday. Hey, in hindsight, should I trim more? Absolutely. But at least I did not sit on it. Okay. Looking, I did get out completely because it's a much more volatile stock. Okay. I had trade looking. This is my third or fourth trip in it. Okay. I buy 19 and below. My average cost of my share was 18.9 something, 95, 97, something like that. So yeah, I was not shy. I did not care to wait, right? Sure, TA wise would have been up there. But when I saw that it's not going to get there and start to retrace, I sold it all out. Okay, if you go back to the 1 minute chart, you see it. Yeah, I saw this move. I was aiming, I had my order in to blow it all out, and it did not get there. So on this retrace, I was just like, I take 21.75. Thank you, or something like that. I can't remember exact price. I'm not, but yeah, before 10 a.m. I'm just like, get me out completely. So it was a nice, yeah, not gonna complain on that nice chunk. Okay, so done. MLCO, almost got there, right? Like I said, almost like the way Looking Coffee, it almost, now this one I missed, okay, because I had my order up there at the start of the opening, right? And once I saw the retrace, I revised it, I move it down, but not low enough. Okay, so that one, yeah, my bad, right? Especially when my cost is down here, right? I bought quite a lot below 6. So yeah, I should have. But I also bought at 7. So I think my average cost is right about here. I'm like basically even Steven. Okay, so I'm down a little bit right now based on the retracement. Can it retrace back to the gap fill? Absolutely. All right, so definitely make a mistake on that one, but not a big deal. Not a big deal. Okay. Last, PDD. Now I got burned on this move here. On that day, I sold 4 put spread, got burned on the 99. I thought for sure 99 was safe. Not safe. Not safe. But then, the one that I sold after at 90 and below, 3 of them was fine. But ultimately, it's a net loss. Now, this one kind of came up in kind of like a random spot, right? You would have thought that would pop to this and then get resistant because of the gap fill. Regret holders when compiling in, but it did not. But today it will. Today it's going to easily come down, and can it fill the gap? Absolutely. All right, so that's take care of all the Chinese stock that I traded. Other people, I'm sure, trade like 10 cents, Neo. There's a whole bunch. Okay, it's a whole bunch. KWeb as well. If you want to just buy one and not have to deal with the whole bunch of them, is KWeb, KWEB. Okay, look that up if you want to trade that. All right, let me go into my little spiel on China economy. China has been going through perhaps the worst recession they had in the past 50 years. Yeah, dare I say, the worst recession they experienced in the past 50 years. This is the worst. And they are cutting multiple rates. They have all kind of rates that they cut yesterday. Not just the discount rate, they cut a whole bunch. You can look it up. And this is a problem with rate cut as well as rate raise. There is not a tool. Rate raise is more effective. Rate cut is less effective. And this is the same issue that the Fed will have and will face later this year and next year, if I am correct in predicting a recession. I am in that camp that say that we are going to get a recession, compared to some other people that say that we are going to get a soft landing, no landing, reflation, you name it. Okay, and this go back to my days in MBA school classes, economic classes, and working in finance. The problem with rate cuts, and you already see this reflected in the housing market. Remember when rate was going, when the mortgage rate, when the 30-year mortgage rate was going from 6% to 7% and over 8%? Remember that? During that stage, you have FOMO. There were increasing demand and home sales as people was scared into buying because they're afraid that if they don't do it now, rates are gonna go higher and higher. And then initially on the rate pullback, when the rate pullback last year or early this year from 8% back down to low 7, there was a slight pickup, but then now rate is in the 6. And if you follow economic data, the last 2 or 3 months, sales are slower now than it were in a long time. It's counterintuitive to think that, oh, if sales slow down when rates goes up, now the rate is way down, why isn't sales picked up? And this is where falling rate, or when the Fed cutting rate doesn't work. And that's why they keep cutting and keep cutting and cut to zero, and it still doesn't help. If you broke, I'm going to make this example real clear and simple. If you broke, does it matter if rate is 1%? If you can't buy a home when rate is 5%, 6%, 7%, 8%, can you buy a home if rate is 4%? All the people that can afford to buy a home at 6, 7, 8 already bought. What's left are broke people that can't buy at 5 or 6 or 7 or 8. So it doesn't matter if the Fed cut rate to a point where mortgage rate is 4%. Remember, during the pandemic, 30-year mortgage rate went down to the 3% range. At some point, the broke people are broke. They can't buy no matter what the rate is. At the bottom of an economy, at the bottom of a recession, it doesn't matter how low the rate is. When people are broke, they are broke. When banks are not lending, it doesn't matter. It doesn't help. Nothing helps. It takes time to heal an economy. Now, on the flip side, when the Fed tried to tame the economy from exploding inflation and hyper craziness that we had like 2 years ago, there are a breaking point where consumers said enough is enough. And the pandemic kind of skewed everything because there was too much free money flowing around. People didn't care if things was a lot more expensive. They complained. People will complain, oh my God, everything is so expensive. Yet they keep paying. They keep buying. And guess what? If you keep paying, if you keep buying, business will not stop raising prices. All right, that it's so raising rate doesn't really work that well either. That's why we have such a hard time fighting inflation. But that's the tool that the Fed has. Okay, at the end of the day, I understand the Fed have limited tools. They cannot stop the stupid. They are themselves stupid. When the stupid try to stop the stupid, you get stupid stuff happening. Okay. Oh, the stupidity of it all. All right. So sadly, raising rate take a long time to work out because people are stupid. The Fed is stupid. If it was me, I would raise rate a lot quicker. You had to, if you want to stop something, you had to send a shock through the system. Okay, and raising rate by 25 bips 10 times is not a shock to the system. Well, they did raise it faster. I'm not saying that they raise it by 25 each time. In the beginning, they did raise it a lot quicker, but to me, they should have kept the pedal to the metal a lot quicker. Instead of like 75 bips, and then 25 bips. No, I would go 75, 75, 75, 75. You want to send a shock to the system to halt the stupidity before it keep on going and going and going. The same thing with rate cuts. At some point, cutting the rate by 25 bips does nothing. When people are broke, they are broke, okay? The Fed has made the same mistake the last recession, and they will make the same mistake this recession. They're gonna cut rate slow and steady, and I guarantee you, everyone that watched this video will agree that whatever they plan to buy, they're not gonna jump on it because the interest rate is a quarter point lower than it was last month or last week. It's not gonna happen. Especially if you're fearful for your job, you're not gonna run out there and buy a new car because, oh, I can get a rate right now for 9.5%. It was 10% last week. No, you worry about your job. You're not gonna buy a car. End of discussion. And back to China. The Chinese economy has had a horrific year. And they are throwing the kitchen sink at the problem. And it's not going to heal. Not this week, not this month, not next month. So whatever hopium that you have that the Chinese economy has bottomed and is up and onward for the stock market, think twice. Do not ignore TA. Use TA as your entry and exit point. Nothing goes straight up, nothing goes straight down. It's going to be a lot of frustration with the Chinese stock market. So play small, play fast, play careful. That's my advice, okay? Don't buy into the hopium that, oh, the Chinese stock market has bottomed and now it's time to pull in, go all in, because no, the economy will take a long time. They're broke. The real estate market over there is broken. They have a worse bubble in the real estate market over there than we had in 2006, 2007, and 2008. This could be a decade-long problem for China. Okay, they have embraced Western nonsense. The American dream of owning a home is now the Chinese nightmare. Everybody owns worthless real estate. I love it. I love it. I am such a hater when it comes down to that American dream of owning a home. I can go on a rant forever, but trust me, it's the biggest scam that this country has as far as the American dream of owning a home. That's a sure way for the government to tax you to death. Nobody owns their home. When you own a home, it's your guaranteed way to pay taxes. A lot of it. All right, it's insane. But like I said, I can go on a rant forever. But yes, China has adopted the American nightmare. All right, owning a home. Everyone is broke. The real estate market is in complete shambles. And no, this will take a long time to heal. A long time. All right, I'm out. Done.